But let's shift focus and welcome on board Abneesh Roy, the Executive Vice President at Institutional Equities Research, Edelweiss Securities as well. Abneesh, good afternoon. Thank you so much for making time and speaking with us. Would you call the updates coming in from the staple world a bit disappointing? Dabur, GCPL, Marico, or pretty much on expected lines? How are you weighing it?
Yeah, hi, thanks. So we did not find the updates surprising. In fact, we had released a note 1 month back on the rural demand, and we had highlighted that rural demand in Q2 will remain quite challenging. In Q1 also it was challenging, but Q1, the base was soft because of COVID last year. This time there is no soft base. So most of the companies' volume growth will be lower on YOY basis. So it will be a weak set of results. But if you really see versus pre-COVID times, nothing has changed versus Q1. So rural slowdown was there in Q1. It has remained. On pricing bit, HUL, Britannia, Asian Paints, etc. will continue to do well. So we will expect HUL to do quite well. In terms of price hike, we expect almost 14% kind of price hike, which will be highest in terms of their peer set and highest for Unilever over last many years. But yes, on gross margin, EBITDA margin, most companies will see a tough time. We do see HUL's gross margin, EBITDA margin contracting, both QOQ and YOY, because there is a lag before the raw material benefit will come. So H2 is where we will see the benefit coming. So in Q2, there will be a gross margin pressure for most of the companies. But definitely in H2, the recovery in rural should also start because of base effect, because of good monsoon in 60% of the country. And also there is a price deflation in terms of diesel, fertilizer for the farmer. So Q2 tough, but we do expect good results from ITC, HUL, Asian Paints, Britannia, Nestle, even in Q2 on relative basis. But H2, we will expect a lot of other companies also to catch up with these 4-5 companies.
Abneesh, is this the way to look at it, that worst is over? Because, for instance, I think Dabur was talking about a margin decline of 150 to 200 basis points. There are talks of single-digit volume decline, and the growth is going to be led just by pricing. Is that what we are expecting for Q3 as well, or things will change materially?
Yeah, it will be a gradual recovery because clearly we are still seeing raw material being volatile. If you see, crude has now come back to $95, rupee is at 82, which is also a worry because most of these raw material is imported. But yes, your comment is right that worst is behind, but it will be a gradual recovery. Not every company will see the same expansion. So companies which have more exposure to crude related input, either in terms of packaging cost or in terms of their core raw material or palm oil, they will see more expansion. That's why we expect HUL, Britannia, Nestle, Godrej Consumer to see more expansion in terms of gross margin. Godrej Consumer, however, will plow back a large part of this towards advertising. So EBITDA margin may not expand too much. But for HUL, Britannia, Nestle, Asian Paints, we do expect H2. The expansion in margins could be in the range of 150 bips versus H1.
Abneesh, what's the pecking order in this sector? And if you could quickly talk about Titan and Kalyan Jewellers, if you cover that as well, in terms of how are you looking at these stocks and which is your preferred name?
Sure. In the FMCG pack, we have 4 topics in our model consumer portfolio for the investors. We have ITC with 30% weightage, HUL also with 30% weightage, and then we have Asian Paints and Britannia with 20% weightage each. Apart from this, we like Nestle also. In terms of Titan, yes, we do have a coverage and we have a buy. And clearly the update was quite strong. We were expecting around 10% kind of a growth in their jewelry business. They have reported 18% growth. Even in watch business, it was very strong number, 20%. So clearly the consumption, gifting, those are coming back, and Titan is aggressive in terms of innovation there. So overall, very good set of numbers by Titan. Of course, festive related demand also has helped a bit because this time the festive season is a bit early. So all those discretionary kind of demand, for example, Asian Paints, Titan, all those are benefited. But yes, Titan will continue to gain market share because clearly still almost 70% of the industry is unorganized. And within the balance 30%, Titan still has a huge headroom there also.
All right, Abneesh. Thanks All right, Abneesh, thanks so much for that and telling us what to expect in terms of numbers, what updates have come and what does it essentially mean. In terms of another exclusive story, it's raining exclusive. The non